The market's breaking a 3-day losing streak. We're up over 100 points. My name's Des Woodruff here at Grok Trade. It is Tuesday, January 7th, 2014, and the markets are up. The Dow up over 105 points. The S&P up 0.6%, the same for the Dow. NASDAQ up almost a full percent, and Russell small caps almost up a full percent. Banks up 0.7%, and the VIX was right yesterday being down. It's down yet again, down 4.65%. Fear bleeding out. So with the fear actually leaving yesterday on a bearish day, that was an indicator that the markets might go bullish today. And the technicals were showing that anyway. Gold off by 0.6%, silver off by 1.52%. And crude oil at break even with the US dollar up 0.25%. Transportation index up 0.74%, showing a lot of strength there. Utilities up 0.84%, people protecting their portfolios. And here we are looking at the S&P daily chart. A nice little bull pullback. We have a nice bull pullback to the rising EMAs. Those are exponential moving averages, which are faster than the simple moving averages. The blue one is our 20-day moving average, and we're showing strength and a bounce even before we get to the 20-day, which is relatively pretty strong. However, in the big picture, we do have a rising wedge, and you can see these two trend lines converging together onto each other. That is a rising wedge. When you have it confirmed with a bearish divergence on the MACD center oscillator, you have a makings of a big time reversal pattern, big bearish move to the downside. If we go to a weekly chart, you will see we're at a resistance point, but we're building this high base. If we can remain the next few weeks building a sideways choppy base, that would give us a base in which to launch from. That would be a very nice platform for the markets to build more momentum to the upside. However, we have a bearish divergence on the MACD, so we do have a decent chance for the rest of this week, going into the next week, of downward motion there, and it could be significant. So it's something that we're certainly watching. Now, for gold, you'll see we had a nice pop last few days. Today we gave a little bit back, but above the 20-day moving average. On silver, same thing. We got down to the rising 20-day moving average, did a gap down and a run up. I foresee more upside potential there. And taking a look at some techs, Apple was down 0.72%. We have a gap down run up. I foresee more upside potential, even though we did have some bearish action on a bullish day. I think that we'll still see some upside potential here in Apple. Facebook was up 1.26%. Nice pop. We're at resistance. Look for downside opportunity here. Google was up nearly 2%. Now this is awesome. High base. We said this high base. Look for Google to take off. Sure enough, boom, to the upside. Google is on fire, well over $1,100 a share. And matter of fact, as a disclaimer, I think I'm holding Google right now. I have to double check that. LinkedIn is put in a bottom. We have a gap down run up. Look for upside potential. LinkedIn is probably put in its bottom. If I go to a weekly chart, you'll see a hammer on the rising 50-day moving average. Look for LinkedIn to start moving higher. Buying opportunity. Microsoft up 0.77%. It's in a lot of trouble. Steer clear of Microsoft. Twitter off a whopping 7.3%. This is trouble. So a lot of chopping here, but long as we can stay within this pattern, let me draw a line for you here. And I do not like that at all. Don't like it. Stay away from it. So that's where we're going to leave it. You get the very best of tactical analysis right here. Our biggest hope is you'll first go through the 101 courses, and our second hope, and let me show this to you. Our first hope is you do the 101 courses here, and then our next step is the 201s, and after that, it's the mentorship. It's a 3-step process. That's those 3 steps that we want you to take because it will make you the best, well-rounded, most confident trader out there in the live markets today. Take care and safe trading.